Good evening, everyone. This is Wayne, and this is the video version of the trade report for Wednesday, June 13th, 2018. Well, the Fed came out and said, we're raising interest rates 4 times this year. That's 1 more time than everyone expected. Guess what the market did? Stay tuned to find out. Greetings, everyone, and thank you once again for spending part of your day with me as I go over the action and activity from the financial market and all of its antics today. Wow, and there were a lot of antics. Actually, initially, there were very few antics. There was just some lazy loping back and forth that really didn't amount to a whole lot, and for all intents and purposes was what was expected. We kind of went up and down and then back up again, and then the Fed came out and Jerome Powell basically said, okay, this is the way it is, this is what we're going to do. No surprise that they raised interest rates a 1/4 point. That was expected. However, the follow-up question and answer with the press revealed that they are looking to raise interest rates 4 times in 2018. And as I said in the tease, that's a 1/4 point more than what they were originally saying they were going to do. So the markets went down. And then they came back up again. And it looked like we had a nice V bottom forming. And then the markets thought better of it. And with the European Central Bank meeting tomorrow with Mario Draghi in our pre-market, we might get a little more hawkishness going around the globe. So sellers came in at the close, and we actually closed on our lows today. So that is very bearish. Now, I'm going to say something rather counter to that. This market is still bullish. Now, the action of the market into the close, I want to make sure I'm being very clear here. The action of the market into the close was bearish. However, the market overall is bullish, and this is what I'm talking about. Let me get a chart of the S&P up here. This right here is a chart of Chipotle Mexican Grill, which I have called butterflies in, and today did them no favors, but everything kind of took a tip to the downside today just because of the way that the market traded going into the close. So if we take a look at the S&P, which closed down about 11 1/4 points today, you can see we're still in a very nice uptrend. And the last trade report I did call for the need to go lower in order to have this market take a bit of a breather. And, you know, I say the things I say, and I know I repeat myself, but these are all of the very important dynamics associated with, you know, what happens in the financial markets. And I've been doing this for over 30 years, and you need to continually remind yourself of the tenets of trading, the tenets of the market, the fundamentals of how you engage with the market, and also continue to look into the mirror at yourself for the purpose of knowing who you are as a market participant. That's the only way you can remain objective and be successful and subsequently profitable as a trader. So, enough about that. Bottom line is, today was a distribution day in a accumulation cycle, just like the one that we had right here. We had a nice little pullback, and then we went up. And then we had a nice little pullback, and then we went up. And today we had a nice little pullback. Now, does that mean we're going to go up tomorrow? No, doesn't mean that we're going to do that. But if we are to look at what has transpired over the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trading days, we see something very definitive occurring. And we also see that the market has tried, but has been unable to make it up to 2,800. So that in and of itself presents a little bit of an aspect of resistance that can't be refuted. The market definitely has a ceiling, and that ceiling has been hit a few times. Now, it's backing off today, and it might even back off more tomorrow. that remains to be seen. But Friday is options expiration Friday, and it's monthly options expiration Friday, which puts even more emphasis on the energy of that process. Big fund managers and institutional investors, hedge funds are all going to be liquidating and re-upping, re-entering positions. So basically there's going to be a lot of portfolio turnover on Friday, and probably it began today, will occur tomorrow as well, and then on Friday it'll be kind of the last phase of it, with some conclusion, if you will, coming next Monday. Now, on the subject of this Friday and next week, I am going on vacation this Friday. Now, that doesn't mean I'm going to just disappear, but it does mean that my appearance on this video is going to be limited over the next week. I will still be doing the pre-market write-ups, but my videos, my end-of-day videos and my midday videos will be limited at best. In fact, there may only be 1 or 2, maybe 3 at most. Heading down to Oregon and staying with some friends at a place in Bend. And then we're going to Seaside, Oregon, where we're going to hang out on the coast for a few days. I'm just going to breathe in some fresh sea air and relax. I deserve it. Gosh knows I deserve it. But it's just kind of a recharging. It's where I go when I need to kind of plug myself into the planet and get recharged. So anyway, all right. So this Friday, I will be writing a pre-market report. And usually on Fridays, I don't do a video anyway. Periodically I do, but there will not be one this Friday, and there probably won't be one Monday or Tuesday either. Throughout the latter part of next week, there may be 1 or 2, like I said, maybe 3. Anyway, so enough about that. A little housekeeping there as I segued into that. So getting back to the market, uptrend in the S&P with the possibility of a follow-through down day tomorrow. And that is a very healthy thing for this market to do. We really do need to kind of, pull back, to reload, and then move back up again. So let's take a look at the Russell. Now the Russell had a pretty decent pullback today. It pulled back about 5 3/4 points, which I know doesn't sound like a lot, but for the Russell, that's a pretty good pullback. Now, everything being equal, the indexes look very similar in how they pulled back today. So there was some symmetry, some similarity in the way that the indexes all did what they did overall. And I'm pulling up the NASDAQ now, which closed down 8 points. And I think the NASDAQ was the strongest of the indexes, and it popped, made a new all-time intraday high, and then closed lower on the day. And then finally, we have the Dow. And the Dow, I think, took the biggest beating of all today. It was up pretty good, and then it just kind of collapsed. So, there always has to be one that either does better or worse than the rest, and of course, the Dow did the worst. Now, if you've been watching the charts I've been putting up, you've been seeing this red Ichimoku cloud. Now, I've been talking about this for the last several trading sessions. Remember, the red cloud is bearish, and it is all about bringing prices that are higher than the cloud toward it. It's not magnetic, it's more of an invitation. It's more of a, welcome. Now, the pinch, on the other hand, which is the area of transition between, in this case, the red cloud to the yellow cloud. There are also yellow cloud to red cloud transitions that are also known as pinches. But these are areas of magnetic attraction. These are kind of energetic, think of a magnet. That's what these areas are all about as it relates to price attraction. And the pinch comes in on June 24th, June 25th. So that is, what day of the week is that? That is Monday, June 25th. So we may end up with some downside surprise week after next. This is kind of interesting how this is setting up. We have this very nice up move. We have a bearish cloud, which appears to be doing its job of kind of attracting price, of just kind of beckoning to price, and it's moving down toward it. We'll see how this all plays out. Like I said, the European Central Bank announcement is tomorrow, and there really isn't anything widely expected except for the accommodation that has been provided by the ECB to the Eurozone monetarily is going to be scaled back. We don't know to what degree. So depending on what is said by Mario Draghi will be dependent upon how the markets react. And if today is any indication of how the Eurozone will respond, we may have another down day. But, you know, the bookend at the end of this week is the monthly options expiration, which a couple of days of pulling back in an accumulation cycle sets the stage for some additional accumulation, especially during portfolio rotations. So we'll see what happens. This is very interesting next couple of days for sure. And today was very interesting as well. Let's take a look at the VIX. Now, the VIX went a little higher today. Now, that predominantly occurred into the close. So let's take a look at a 15-minute chart of the VIX, which will give us kind of an intraday play-by-play of the VIX. And you can see, by virtue of the candles here, that the VIX was just kind of lollygagging it. It went up a little higher, went a little lower, and then wham, and then it decided to relax, and then into the closed on its highs. So this is normal VIX reaction to price action that we had today. So I'm not really looking at this as a change in market energy. I'm just looking at this as an event that was based upon a known binary event. So we have what we have, and the market did what it did, and nobody knew exactly what was going to happen, but now we do. And really not a whole heck of a lot out of the realm of what would have been expected on either end of the equation, either an up or down day. So we just kind of look at this, acknowledge it, not really look to it or at it as if there's any kind of message it's sending. We need to have more information, and more information will come tomorrow with the European Central Bank. So another day of price action that may or may not continue or add to or subtract from, however you want to take a look at it, from today's action. But nonetheless, it's another known binary event that's coming tomorrow that the market will inevitably respond to. Now, the difference between the European Central Bank announcement and the Fed announcement that we had today is the fact that the European Central Bank announcement comes in our pre-market tomorrow. The Fed announcement comes about halfway through our trading day. Actually, more than that, about 2/3 of the way through our trading day. So it's kind of an odd anomaly. It's one of those significant economic data points that comes when the market is open. And so anyway, the algorithms kick in. We get a lot of wild and crazy price action, and this is the result. So it is what it is. It's been that way for a very long time, and I don't expect it will ever change, because it's just, like I said, the way it's been, the way it will always be. I do want to show you one more chart, and that is the chart of crude oil. Now, crude oil made it above this 100% symmetry resistance. Now, I told you that if it closes above the symmetry resistance, I'm going to be looking at a bullish position in oil. Well, it closed below. So we had a close of 66.61, and the 100% symmetry resistance is 66.70. I know it's only 9 cents, but Traders look at these resistance lines. They look at these Fibonacci's. They look at support and resistance. And if price closes below, that is resistance saying, nope, not yet. So I'm still in a holding pattern. I'm still waiting. Not in a position to buy yet. But I will tell you that this up move is starting to look pretty attractive. And with the June 22nd OPEC meeting coming, this actually could rip up to $69 or $70 a barrel. I think there's going to be some surprises coming out of that OPEC meeting. Even though they've already said that they're going to be cutting, if not completely eliminating, the output cuts that they had instituted for the last year, they may say or do something very bullish in opposition to that. It's a very interesting set of circumstances when the OPEC ministers get together. They're a bit Keystone Cop-ish. If some of you may or may not know what that means, but if you look up Keystone Cops on Google, you'll see it's kind of farcical. So at any rate, I mean, it's serious stuff because it moves the oil market, but you can't really rely on anything they do or say because the next time they do or say anything, it's oftentimes in exact opposition to what they originally said, and they just kind of trip over their own words and deeds. And anyway, we'll see what happens on June 22nd. So I'm looking over my watch list here and just looking to see if anything else in particular stands out. Amazon closed higher today. It closed up $6.11. Oh, I should show you a chart of Netflix, which is amazing. So a judge okayed the AT&T Time Warner merger deal, and all of the media stocks went wacky. So you can see all new highs intraday and new all-time highs for Netflix today. Really white hot today. Maybe some continuation tomorrow, but geez, this thing needs a pullback. I mean, it's almost you need to make sure you're wearing asbestos gloves if you're going to go long this thing. I don't know. I'm looking at this and I'm thinking to myself, yeah, it's really bullish, but wow, it's too bullish. So a little pullback here, folks. Let's give some people a chance to get in this thing at a little bit lower price. And that may or may not happen. Part of the equation here, of course, is what I already kind of showed everybody, but we've just got this bullish Ichimoku cloud that is really kind of feeding this. You kind of look at the cloud like it's an updraft. So it's moving prices higher. So, if it goes higher, it's kind of in keeping with the current momentum, but there does come a point where a parabolic dynamic in price action usually results in a pretty decent pullback. So, be careful if you're all excited about Netflix and you feel like you're maybe missing out on something. And if you're not in, you've missed out. But at the same time, this isn't the time to get in. That's my opinion, my 2 cents. I think waiting for a pullback in Netflix would be prudent. I'll just show you Amazon since we're kind of going over a couple of additional things here. Amazon had a nice push to the upside. I think it didn't quite make a new intraday high on the day, but it did make a new closing high, a new all-time closing high on the day. So Amazon set a new closing record today. Fantastic. I mean, that's some remarkable work. And this particular pattern is very bullish. We've got kind of this little swooping up, and it got kind of steep right here, and then it pulled back, and then it kind of went sideways, and now it's swooping back up again. I think it finds the 1618 at 1736, but I also think 1750 is in its sights, just from a price level perspective. You get 1750, 1775, 1800. You start getting those numbers that are kind of poetically positioned, and price just kind of seems to move toward them. And this also is a very bullish Ichimoku cloud. So I think Amazon's going higher. I think if you want to get into something and you want to be long a tech stock, I think Amazon's the one. That's my opinion. You could also, Twitter has been on fire. Twitter's not really one of those I have my trading plan in alignment with, but I'm not disrespecting it. There's a lot of different reasons, which I won't go over here. You could also look at Apple, which had an amazing pullback today. In fact, let's look at Apple. Apple had a great pullback today. I think I would say Apple is a buy here. And in fact, I think Friday it's going to get added to. I think this is looking really attractive. In fact, if it gets down here, down to about 188, 189, I think this thing's going to just snap up to like 195 or so. Apple's got a buyback program, a corporate buyback program. In other words, they buy back their own stock, which of course moves the stock higher. They don't release the schedule that they buy back their stock on, but every once in a while you see a $3, $4, $5 move in Apple, and that's them buying back their stock. And with the pullback that it had today, about $1.50, this thing is ripe for getting bought. So I'm looking at possibly getting into some long calls tomorrow. And we'll see how the pre-market ECB monetary decision plays out with Mario Draghi. So that's enough for today, folks. With that, trade safe. Trade what you see if you choose to trade at all. Good night and good trading.